Hello and welcome to another episode of Niche to Necessity. Today we have Dorothy Haraminac, and she's an expert in blockchain forensics and investigations. She's also the founder at YBR Consulting. Um, Dorothy specializes in asset tracing, economic damage calculations, and valuation in complex disputes, including matrimonial cases. She's testified on Bitcoin and cryptocurrency tracing and provides fraud investigations, compliance analysis, and due diligence for fintech and MMA. With her deep expertise, Dorothy is here to share her valuable insights for tax and accounting professionals. Welcome, Dorothy. Thanks for being here.
Yeah, thanks for having me.
So normally, I sometimes like to get into people's background, but I think that there's a lot here. So I'd love to kind of just quickly go over your background and how you got into this space, but then would love to kind of jump into things. Would you mind just giving us a little bit of context on how you got into crypto?
Sure. I worked in litigation support, which is basically it's math for attorneys, right? When I was a kid, I thought lawyers did their own math. Turns out they don't. They hire people for that, and that's where I come in. And so the field itself is called litigation support or financial forensics or forensic accounting. It's kind of all the same thing mixed in there, valuation mixed in. I was in that field and I wanted a little more time, I guess, to develop a case. So I wanted to find out, who do attorneys hire before they hire a litigation support expert? And it turns out they hire a private investigator. So I left the firm I was at, went to a private investigations firm and started doing things like digital forensics, which you need a license for in Texas. You need to be a PI. Started doing that kind of thing. And we started doing education on some of the emerging technology trends that we were seeing. And so we started doing education on digital forensics. We started doing it on cybersecurity, on OSINT, open source intelligence, and on cryptocurrency. And it was the cryptocurrency that really hit something in really the matrimonial arena, because it was this new class of assets that nobody really knew what to do with, and we started doing education, and then we started getting hired on different cases and started tracing assets. That was back in 2016, I think, 2017 or so.
Wow, early, very
Yeah,
early.
been doing it a while.
Yeah, still feels early, but that's great stuff. I think that it's such an interesting aspect when, I'm sure there's a lot of spouses that have kept this from their spouses, and maybe there's some suspicion around it, but lots of complexity around it. So let's dive a little bit deeper into forensic accounting and specifically on the blockchain. So what does forensic accounting on chain involve, and how does it differ from your traditional forensic accounting that you'd be looking
Yeah.
at in
I'm
TradFi?
I'm going to correct your term for the duration.
Okay.
It's forensic accounting is kind of a subset of
Okay.
financial forensics, but the
Okay.
terms, they get used interchangeably. But forensic accounting is kind of typically more focused on accounting records and financial statements and
Okay.
discrepancies within those, whereas financial forensics is much broader. And so we can break that term down a little bit too. You've got the financial side of it, which is really where you're playing the match game, like the old kids game where you're like flipping faces and who's matching and whatever.
Mhm.
And so instead of faces, you've got really you've got accounting records, so financial statements or your QuickBooks file or whatever. You've got bank statements, credit card statements, investment accounts, all of this, money between accounts and money movement and the story around that movement. And you're matching all of those things. You're matching the story, you're matching the records, and then you're matching that against tax filing. So it really is the match game. Do all of these things add up, and do they add up to what's being the story that's being told in declarations or in the pleadings and of a court case? That's kind of the financial side of it. You've also got the asset tracing side of that, which is where you're applying a character to the movement of assets between accounts. So whose money is this? Where did it go? What happened to it? And kind of where is it now? The disposition of it and how much is left, that kind of thing. That's the financial side. The forensic side of that is wrapping all of that analysis up in a cohesive manner and explaining it to the trier of fact. So explaining it to the judge or the jury that's very difficult when assets are complex, and they can be complex, like holding multiple portions of a medical practice, or lots of different crypto assets. When assets are complex, that explanation to the trier of fact becomes much more difficult.
Mhm.
You don't want to be the person that spends 6 or 7 pages of your report on the history of cryptocurrency. You wouldn't do that for a traditional asset. You wouldn't give the judge this history of banking or history of investment brokerage. You wouldn't do that. So don't do it with crypto either. That's kind of the forensic side of it, is explaining it, and then also ensuring that the analysis you did was all admissible. That the things
Mhm.
you relied on were reliable, and proving to the court that they were reliable, or that the conclusions you drew from them were reasonable. That all is on the forensic side of it. That's kind of the traditional side, right? With crypto, now you've got blockchain forensics. So you're throwing the blockchain on top of everything. And the blockchain is kind of a misnomer. There's not one, there's not the blockchain that's out there. There are many blockchains and tens of thousands of assets all over them. And they all function differently. They've all got rules around how things are transferred on the blockchain. And what a transfer is on the XRP ledger is very different from what a transfer is on the Bitcoin blockchain, and that's very different from an EVM compatible chain. And so you have to understand all of the inner workings of the chain that you're researching, just like you understand at a deep level how investment accounts work, how a 401k works, how tax returns work. Experts in those fields understand those very, very deeply. You have to have that understanding for blockchain forensics as well, or we'll talk about how errors happen. And really, they happen when you've got a traditional skill set and you apply it to the blockchain as though it's like a one-for-one standard. You have to learn what the new standard is. What do transactions look like on this new thing, and what does that mean? That's really one of the big errors I see, is where someone doesn't understand what a transfer to an exchange looks like on the blockchain, right? So
Yeah.
do you have a question about that,
Well, no,
Athena?
I have a follow up on that. Like, or like something like if you're posting collateral on something like Aave, it can look like a transfer to and an exchange for another group of tokens, but really it's more like a deposit slip that tracks the interest that you're accruing. So if you know enough to get yourself in trouble, you could think that that's a transfer or a sale of those assets, when in reality it's more of like you're posting collateral and then you could borrow against that collateral. I didn't mean to jump in, but
Yeah,
I was just doing a call on this recently where it's like, if you don't understand the underlying data and you can't get deep into it, it's hard. You can misclassify something very easily.
absolutely. So not only could you misclassify something, but then you can throw some wild accusations out there. So, right, so think of that transaction, the Aave transaction. What happens is that instead of classifying it as a transfer or a sale, which in matrimonial litigation, it would still be leaving the estate, right? Transferring or selling for something. But if it's classified as a withdrawal to another account, now what's happened is someone has said that the Aave pooling account is yours and you own all of those assets. That's absurd, right? That's like saying,
Mm-hmm.
because you sent dollars to your Chase account, you own all the dollars at Chase, right?
Mm-hmm.
Crazy. And that's really what's happening, and it stems from that deep misunderstanding, or really just like a very, very basic understanding of transfers. You're thinking that everything is a to from, and it's not.
Mm-hmm.
That's just not what it is. And you have to have that understanding, or at least know that you don't know, so that you can
Mm-hmm.
do the basic ones, and then you can call someone else in to help you understand the rest of them. That happens a lot, where, and then if you're the crypto spouse and your expert is saying, well, I can see you have this wallet and it's actually, an exchange hot wallet, that's really bad for you, because it means, one, that you have failed to disclose a wallet, and that wallet's very valuable, and it's your expert and their understanding that's driving that misunderstanding. That's a problem,
Mm-hmm.
because what you don't want is your expert to be relying on you for an explanation of a transaction. They need to have that expertise on their own, because if you end up with, it's called an over reliance on the client's contention,
Mm-hmm.
that's already going to make them look bad. Like, I use this example a lot. Like, if I was in a divorce, then if I'm the person getting divorced, it's going to be very difficult for me to hire an expert to explain crypto to the court, right? I know the most about crypto than most people, except for the people that
Yeah.
built it, probably. I'm pretty knowledgeable. It's going to be very hard for me because I'm also cheap to pay someone else to do that. But I would have to do that. I'm at least smart enough to recognize that I can't be my own expert,
Hmm.
and I can't be the expert's basis for an opinion either. That also is going to look bad. But
Yeah.
yeah, no, it's super that misunderstanding, trying to fit those complex transfers into a to from basic accounting model. That's where a lot of errors and misunderstandings happen.
Yeah, and I'm sure that additionally, there's a lot of reliance on the part of certain spouses of thinking that they're anonymous. Really, this is all pseudonymous, and it's actually very easy to track down who is who on chain.
Yeah.
But also the transparency. There's a paradox there because it's transparent, but it's not always easy to glean what is happening with each transaction, as we demonstrated in the previous example. So, how do you navigate those aspects in these types of cases?
Yeah, I mean, the pseudonymous issue really bothers me, and it's really funny because people say that, and it cracks me up because when you see that in an expert report, that expert is going to be less reliable than others, mainly because they forgot about how I can create more pseudonyms than there are grains of sand on earth. So
Hmm.
effectively, it can be anonymous. What happens is that, and it's similar to a money laundering investigation. I don't really care about what happens in between the addresses. I care about the inputs and I care about the outputs. And so sometimes when money is placed into crypto, that's where you find it, right? It's going from your joint bank account to Coinbase. That's not really great at hiding or concealing anything. And then it's coming out it's going into some other addresses, it's going into another exchange maybe, and then I'll see that deposit into your bank account. It's
Hmm.
very easy to get bank records in court. You subpoena the if you know which entity has them, right? It's very easy. It's a little bit harder to subpoena a crypto exchange because not all of them are based in the US. But that's really where the analysis comes in, is finding out where money went, where dollars went, whether or not those dollars were separate or community, and then tracing what happened to those separate assets and the community assets, what happened to the marital estate assets in general through those addresses. So if they're going into an exchange, you need exchange records. If they're going into wallets, you need addresses. And then you can see where they go. But you have to identify what that where is. And the way you do that is either with public attribution, with different research, search up that address, see if it was part of any kind of crypto project, and with paid attribution data. So you have to also know the reliability of that attribution data you're using, because it may be different across different sources. And so I may say, hey, this is Binance. You may say, no, it's Gemini. You need to know the difference, and you need to know the reliability of the attribution you're using.
That's super interesting. I think all this stuff brings up a lot of other issues, and I think that it's really challenging to wrap your brain around a lot of the stuff if you're newer to the space. So, for those who are kind of newer, what are some common methods that individuals tend to use to hide crypto assets, and how can a professional like yourself go about uncovering them? What are some of the strategies you use for that?
So it's I do get kind of painted as this finder of assets a lot, but I am hired by the crypto spouse as well, almost as often as the non-crypto spouse, because what happens is the non-crypto spouse may get an expert, or may do their own research and start levying some wild allegations like you own all of Aave, and the crypto spouse has to defend against that, or at least wants to ensure that they're disclosing records properly or something like that. And might be the wrong word, because it kind of implies intent, right?
Hmm.
That at the outset you were trying to hide this, and that may not be true. That what happens when people find themselves accused of hiding assets, it kind of happens in two ways. One is a lack of disclosure. So you failed to disclose the records that you should have disclosed under your state's rules for financial disclosure.
Hmm.
Crypto's financial, you should disclose it. Don't err on the side of, I didn't know I was supposed to disclose it. That's a bad idea. So you've got a lack of disclosure, and whether or not that's driven by ignorance or intent doesn't really matter for tracing. It does matter for, an award of property division, a disproportionate award, and it'll matter for a damage claim, but it doesn't matter really from the tracing aspect of it.
Mhm.
You've got this lack of disclosure issue that could get you get an accusation of concealment levied against you. And then the other way that it happens is kind of an effort to conceal, an effort to obfuscate. And the way that you show an effort to obfuscate is kind of a repeated pattern of transactions. So in the traditional forensics world, that pattern might be like, look, you disclosed a year's worth of credit card transactions except for June. Why didn't you disclose June? Give me June. It was very easy to see that June is missing. Everybody knows about how to review those. You need to have that same skill set for crypto records, right? So that you can say, this is obviously missing. Wallet records are obviously missing. Give me that. So, but with this credit card example, June's obviously missing. Either you give me the June records, or I'll go to the third-party account provider and I'll get those records for June. So then you get June and you see, oh, you went on this huge trip with your paramour, right, with your affair partner. That's why you didn't disclose June. When you start to see a pattern of that, a pattern of failure to disclose, that when you do discover those records show something nefarious or show something that is otherwise harmful, when you have that pattern, you start to develop a sufficient basis to say you engaged in efforts to obfuscate tracing. And you don't want to find yourself in that position if your failure to disclose stemmed from ignorance. If it was intent, then of course you're probably going to land there. But if it was ignorance to begin with, that's really where the biggest problem is. As the crypto spouse, you're going to be asked for records related to your cryptocurrency. And the person asking for those records is not likely to be me, because I'm not an attorney. It's going to be your ex's attorney, and how intelligent they are, how knowledgeable they are about crypto is going to drive how sensible those questions are. And they may be nonsensical, right? They may be, show me the account where you have assets that contains this address, and the address listed will actually be a transaction ID, because like, how do you answer that as the crypto spouse? I don't know what you're asking me for. To a judge who doesn't know any better, that looks like an address. It looks like you're just concealing. It looks like, it looks bad. And so you have to make sure that you're disclosing records and that you're not the person who's trying to correct the ask, right? If you're the crypto spouse and you're saying you don't make any sense, it still looks like you're trying to hide something. Get an objective expert in there to tell them they're not making any sense. Get a neutral expert in there to say what you're asking for doesn't make any sense. It's difficult. And then I don't even know if I answered your question. I think I was rambling.
No, I mean, like, so what are some of the tools or, blockchain explorers or metadata analysis that you're using to actually go about this tracing effort?
Oh yeah, so what do I use to find stuff? So I use a combination of things, of skills, of different tools and technology that you can purchase, and transaction analysis. One of the things we use is blockchain data attribution. And that's usually in the form of Chainalysis or Elliptic or Clue or something like that. They market themselves as a tracing tool, but what they really are attribution data aggregators. So what they're doing is attributing an identity or an exchange or something like that to an address. So now instead of just a string of numbers and letters, I now know that's Binance or that's Coinbase or that's whatever. Some public block explorers will do that also. The Etherscan and the Etherscan's derivatives have some attribution that's public, so that's helpful. So we'll use public explorers, we'll use some paid blockchain data attribution. I also use OSINT and OSINT data aggregators. That's the open source intelligence. People do get a little bit confused by that term. So open just means, can a member of the public get access to this information? And so if it's available to a member of the public, then it's open source. That's what that is. And so we use a variety of tools to do that. Some are like social media aggregators, that's just from public sources. I don't use anything that relies on things that are called sock puppet accounts. The short of that is where if I'm investigating you, I'll set up a fake social media profile and befriend you and follow you and that kind of thing. I don't do that kind of thing. There are investigators that do that kind of thing, but they have a specific purpose and they're probably not trying to present that evidence in court, right? Because doing that kind of thing can make stuff inadmissible, especially if what you're going for is financial data. So I've listed what? I've listed the blockchain data aggregators, the public explorers, the OSINT data aggregators, of course, the financial records and that kind of thing. So what you look for when you're looking at the public explorers is really an ability to export data so that you can get it into your analysis suite, and an ability to view balances or to view different kinds of data. So some of the one I mentioned before, it doesn't have a great view of NFT holdings, so I use a different tool to view the NFTs held in an account. I use other tools to view NFTs that may have been minted and marketed on different platforms. And so you have this combination of tools, this suite of analysis. And with crypto, it really starts to look less like an accounting analysis, less like a to from kind of thing, and more like link analysis. And so if you are coming out of military intelligence, you'll be very familiar with big data analytics tools, things that are very good at linking information across a disparate source. Some of the accounting suites and some of the analytics tools, like fraud analytics tools and some of those things, rely a little bit too heavily on a standardized set of data. And crypto data can get very non-standard very quickly. So what you want is a link analysis tool, something like Palantir or IBM's Analyst Notebook. Those tools are very good at bringing information together when it's non-standard, and then allowing links to happen and viewing those in a cohesive kind of manner. That's really it. I also use a lot of Excel, and I don't use macros. That's kind of back to that standard error happening. People that use macros for kind of a traditional forensic role that then try to force crypto into that. That's where a lot of errors can happen and miss a lot of information that way from complex transactions. But I do use Excel kind of to create the presentations that are going to court, because it's very simple, and because if you don't use all the complex features of Excel, then you're limiting kind of how you have to present data, and that can help you simplify it. Like if you have to use a table and you can't use some kind of complex chart or something like that, then it forces you to simplify this otherwise complex thing. And so I use a lot of Excel. I use a lot of PowerPoints to try to like show movement.
Yeah, makes sense.
Yeah, and really, if you keep the tools simple, then it kind of helps really simplify that what's going on, because it can be really, really complex. Really,
because if you pull up an Etherscan transaction in Core and say, "See, it's right here on this public,"
it's right here, right?
Yeah, see, it's hard. It's like, okay, but what's Etherscan? What like you got to go through a whole thing. But if you can present the data in a more simplistic form for someone who's used to seeing it that way, it feels familiar, and it makes those connections easier to make, even if it is a very challenging topic.
That's right. And especially if one good example is if it's a decentralized exchange transaction, right? Some of those very complex, right? The details of that transaction are scrollable. There's no way that you're gonna convince anybody that says what you think it says. But if I can put that in a little PowerPoint with little circles and little lines, now everybody gets it.
See, this ETH went into a liquidity pool that then sent some to another liquidity pool and exchanged other assets. See, it's right here. Yeah, it's it can get messy, right? One thing I wanted to touch on your, you brought up the fact that you have to kind of try to figure out whether it was ignorance or an attempt to obfuscate. I can speak to working on crypto taxes a lot. The vast majority of the time when a wallet address is missing, it's an ignorance thing, or just like they just forgot about it kind of thing. Like I don't think I've had a single crypto tax client where all of the data was provided to me at the outset. It took me uncovering by doing my reconciliation process to say, hey, your balance can't go negative. Where are these funds coming from? So I think that it's interesting to look at that, where it's like, and to be able to identify patterns where you're seeing this intent forming, because obviously it's different in a marital case where you're trying to figure out who gets access to what assets, but I think the vast majority of the time when a wallet address is missing, at least in my field, it's because the person just simply forgot about it. So that's a totally possible outcome as well, that they just forgot about it, or they lost access to it, or whatever.
Well,
Um,
your pool of clients is skewed just like mine is, right?
yeah.
Yours is skewed where you're at least limited to people who are trying to report it on their taxes,
Mhm.
right? And so you
Fair
already have
enough. Fair enough. Yeah. Yeah.
and mine's limited where they may not be, you know,
Hmm.
may already be engaging in those attempts. So of course that'll be skewed, but you bring up an interesting point with the reconciliation. So what I see a lot of is that skill, the reconciliation skill, especially in crypto, it can transfer to forensics, right? So somebody with reconciliation skills or experience could transfer into forensics, but they have to unlearn some of those techniques. And one of the big one is just adding your deposit transaction to make that balance not be negative, right?
Hmm.
Like you don't want to
Yeah.
just plug it in. You need
Yeah.
source for plugging it in. And I get a lot of that kind of unlearning, like, no, you can't just plug in a deposit in forensics. You have to have a source for that. You have to identify,
Yeah.
like when the balance goes
Don't.
negative, that means transactions are missing or records are missing.
Yeah.
That's what that means. And so you have to be aware of that too. That's an interesting way to bring that in.
Yeah. So we've talked a little bit about presenting data to courts and things like that, and I'm sure there's a myriad of challenges that come along with that. Can you kind of dive a little bit deeper into what some of those challenges are when you're presenting blockchain evidence in a court?
Yeah, I mean, first you have to get it, right? So you have to know where the addresses are, what they are, and sometimes you'll get someone who's intentionally only disclosing a set of addresses. So they're not disclosing all of their addresses. They're certainly not disclosing their wallet software in the way that's appropriate. And so when somebody discloses a set of addresses, you can use clustering, which is something that the data aggregators use, but something that some you can do that. You can do that technically also, you know, with a little script to show that if you had this address, then you also have these four. You know, for sure that can happen with Bitcoin. You can do that with some of the others as well. So when that happens, sometimes the crypto spouse is surprised. They might come back and be like, you can't know that. There's no way for you to know that, because they're not a forensic expert, you know. And so they thought they were concealing something from their spouse. They may have taken steps to do that successfully, but they didn't think that through from a forensic perspective, because they may not know how to think that through. It's really critical to come at that from a point of full disclosure and like really disclose what you have, where you hold it, and how you access it. That's kind of the critical point. And now I think I've completely rambled and didn't answer your
No,
question.
no, but I love you bringing up clustering, because this was actually in the new in like the crypto news like yesterday. There was a girl who's like became like an overnight celebrity, and she started she's like a celebrity now, and she started a meme coin and rug pulled it all. But they were able to identify that clusters of wallets held 97% of the supply, and
Yeah.
then just dumped it all on the unsuspecting. And it was like over the course of 20 seconds, they extracted like millions of dollars. And they identified these clusters of wallets that they knew were team members that held 97% of the supply. And they were able to kind of like trace them back to a similar source in the exact way that you're describing.
Yeah, absolutely. And what happens though is it kind of calls into question the reliability of your aggregator. You know,
Okay.
so yes, I can use clustering if I'm doing it technically, then it's unquestionable. But if you're relying on a data aggregator to do that,
Like,
um,
how are they doing the clustering,
yeah,
and how does
how did
that
they
how does
do
that
that?
process work?
And what was their incentive to do it, right? There was a much bigger case where that they identified the culprits behind an exchange hack, right? I think it was Bitfinex or something. It was really big. But that company had issued a financial incentive, a bounty, 10% of what was stolen. Well, 10% of what was stolen is $400 million, right?
Hmm.
That's a pretty big incentive if you're the guy adding the attribution data at the data aggregator to be like, yeah, this is, you know, Billy and Sue, and go ahead and get that attribution data out there. Now you can claim that bounty, right? Hey, look, I trace this back to Billy and Sue, right? You've got to call that into question and make sure that, especially if it's a criminal case, that the evidence is being relied upon is actually reliable and is actually, you know, admissible. It was obtained in an admissible way. That can be tough, and so you have to know, you have to know what clustering is, how it works, and how the tool you're using does it, because they may not be doing it just from a technical aspect. They may be doing it from some other methods also. And so you have to be really careful with that.
So what strategies do you implement when you come across like instances of incomplete data, for example, like you get into a black box, like with, FTX or something like that, or another like exchange that's shut down, where that some of that historical transactional data may not be
Available.
able to come up with that or things like that. What strategies do you implement in those cases?
Yeah, that, I mean, it happens a lot. There are quite a few exchanges that turned out to be exit scams or collapsed, of their own accord. It's really tough, and it really depends on the case. So if it's a matrimonial case, then you have to see whether or not the assets that went into that exchange were put into that exchange with the knowledge and consent of the spouse, because that matters in divorce. Were they put in that exchange with, if it's a commercial case, were all the risks identified, and did the decision maker make a reasonable decision when placing assets there? That's going to depend on what time it was. During, when did they put them there? Did they put them there after like 2 days after the feud, between the little Twitter feud broke out, or was it before? Because if it was after, you're going to have a difficult time saying that it was a reasonable thing to do. And so it really depends. Sometimes records are available, so you've got one of the oldest exchanges, you have Mt. Gox, where those transaction records were leaked to the public. And so that's something that you may be able to rely on. They're not necessarily complete. They have some redacted information. You should absolutely not download those yourself, because a lot of those downloads have embedded malware. And so you have to know what you're doing even to get those records. But sometimes they're leaked. And then you have Celsius went down. Celsius had an incident with the way that records were disclosed in court, so that all of the account holders were disclosed. Well, if you were fast enough, you were able to get that data and you'll be able to rely on it and say, I know for sure this person had an account there, because that data was released to the public. It was pulled back, but that doesn't mean it's not still accessible. So finding records in that way, can be a route. But for some,
And that would be admissible in court, even if they were pulled back.
It depends on the court, on the jurisdiction, and sometimes there's a means to an end argument that gets made in some jurisdictions. And so if that argument's been made in your state, or in the federal court, wherever you're presenting it, you may have a precedent to be able to admit those. You may not, but that goes back to your kind of traditional skill set. You have to know your jurisdiction. What's the valuation standard here? What's the admissibility standard here? What are those things? The admissibility standard really is a big one, because you end up getting, like, one of the ways you could show somebody had an account would be they had transactions with it in their emails, right? Here's all the transaction confirmations. You can get that. Mt. Gox emailed everybody transaction confirmations. And as a nerd, I tend to save everything, right? I just open a new email account when one gets too big, right? So I still have those. I still have all my transaction confirmations, even if an exchange goes down. That may also be the case for, the person that you're asking about. If the exchange has gone down, there's no emails, there's no anything, there may still be records on the devices they used. And getting access to the devices somebody used is a very, very difficult thing to do, for good reason, right? There's not a very strong argument for someone to say, I want access to your device and everything that's on it, because there's no way to limit a digital forensic image. But I think you probably have some more questions about that aspect of it differently. But really, when it comes down to it, in divorce, if you've got assets going to FTX, you're not getting records from FTX because it's collapsed and nobody's buying them out of bankruptcy or whatever. You can't get access to records. You then have to change your damage model. And it's true in a commercial case too. So what you're going to look at is what went in to that exchange. If you've got multiple exchanges, then you're going to look at what happened at those other exchanges, and maybe theorize about what could have happened with those assets at FTX, what the value could be today, and then that turns into a traditional damage calculation, to kind of explore the what if analysis and decide what needs to be claimed for this asset.
This is all super interesting to me. I think it's like super cool to be, able to apply this field into something that's not traditionally, seeing this. So Can you maybe share some of like a real world example? Obviously, I'm sure you can't reveal private information about people, but like more generalized examples of uncovering like hidden crypto assets or something that was like I don't know, like really interesting to you that you've seen in the field?
Yeah. No.
No.
So I get asked that question a lot, like it's because when you're disclosed as an expert, you have to list all the cases that you've provided testimony on. You
Hmm.
know, and where have you been deposed? Where have you provided trial testimony? What cases were those? And what happens is that opposing counsel will tend to ask detailed questions about those cases. What was this case about? What assets were at issue? You know, and some of those questions I can answer, but for the most part, I don't disclose anything about cases ever, right? That work is
Hmm.
confidential. The only way you're getting information out of me is with a court order from a court of competent jurisdiction. So not the one that your case is at, but the one that handled the case that you're asking about, and or written consent from the client. You know, that's that information is locked down. Everything I do is confidential. It's in all of my engagement letters, and then sometimes cases have they're under seal. They've got protective orders. They've got additional layers of protection on top of that, which I absolutely value and respect. You know, as someone involved in cryptocurrency, I feel required to also be a privacy activist. Right? It seems
Hmm.
like those go hand in hand. But yeah, no, I value the integrity of that data and absolutely don't share anything. And even when presented with something, like a lot of my cases and some of my reports end up being part of the public court record. That doesn't mean I can talk about them, right? You would have to go find it and present me with the report you found and then say, you know, tell me about this part of your report. And then I could
Hmm.
talk about it, but that burden's on you to find it, right?
Hmm.
Um,
Okay.
generally, of course, as somebody who does financial forensics, I think financial forensics is important. I also think you should hire an expert early in the case, not late in a case. A lot of times, and when I present to attorneys, I tell them hiring me early will save you money. And that is counterintuitive, but it really will, whether you're on the side of the crypto spouse or the non crypto spouse. Because what happens is that you end up going down all these roads of misunderstanding or not very clear definitions or something like that. And we cut that off at the very beginning. Here's a clear definition for how to go get these records. You mean to jump on a video call with the opposing client, the crypto spouse, and just tell them which buttons to push? Let's do that if they're willing to do that. That
Hmm.
can save a lot of time and effort in the discovery process,
Hmm.
and then it's straightforward. Then you don't have those wild accusations of you failed to disclose and it was intentional. You know,
Hmm.
you can't make that leap. And
Hmm.
that, as the crypto spouse, having me on your side in your corner early on can also prevent those things, because I see a lot of post judgment actions where the non crypto spouse suddenly decides they want to, claim this person had multiple millions of dollars in crypto, and we're going to go after it. The problem with doing that is that as the former crypto spouse, you still have to defend yourself in the post judgment action. You still have to hire an attorney. You're going to have to probably hire an expert to defend against these wild accusations. And so you want to make sure in the divorce itself, before you ever get to post judgment issues, you control for those post judgment issues. And so you don't want to use like boilerplate language for a settlement. If you're settling, you want to make sure that everything is ticked and tied so that somebody can't come back after you, because your non-crypto spouse may be surrounded by sycophants that are like, oh yeah, your ex is a crypto bro or whatever. They've got
Satoshi.
multiple millions of dollars. Yeah, right. I know he told me that he had multiple millions. Like, okay, wait, when your friends start telling you that about your ex-spouse, that's a red flag. Like, not that your ex-spouse actually had multiple millions, it's a red flag for the friend. Like,
Hmm.
that person should have told you during the divorce, not after you've settled. And
Hmm.
so really have to be careful with that. um
Yeah.
it's really trying, and it's a lot of undue stress and burden on both parties, to have that conflict when you could resolve it with better language, really.
Hmm. So what, um, how do you think that expert testimony shapes the litigation process when it comes to this? Like, how much does it shape the outcome,
Ooh.
and what does that look like? I guess.
Yeah, it really depends.
Hmm.
So I really try to talk myself out of work a lot. I really encourage clients to settle, whether I'm on the side of the crypto spouse and non-crypto spouse, but they have to do that with knowledge, with knowledge and information. You can't really settle if you don't know what all there is or what happened to it, or whether I don't typically get involved in cases that are not contentious. When I get called, parties don't trust each other. They don't believe a single word out of the mouth. They are very angry. It's contentious. They're in no way amicable. And so you have to, and I'm not your advocate. That's kind of the other confusion. When somebody's paying another person, you think that they're supposed to do what you want them to do. That's not how this works. Right? I'm an objective expert, and so I'm going to find facts and I'm going to conclude on the basis of those facts. I'm not going to be like, he absolutely is a criminal as a result of this. Like, I will never say those words in a report or a trial or whatever, regardless of how badly you want them said. And that can really be difficult for someone to realize. I've not taken on cases because the client had data that they probably shouldn't have had, or wanted too much kind of input into the expert report, but that's not how this works. And so I'm done. Go find somebody else. But how it shapes the conclusion, it really, really depends. I've been encouraging other people in financial forensics to get into blockchain forensics because there is a huge gaping need for more experts who are actually qualified to be experts and not just random people that are presenting themselves as that. That causes much more stress and cost on both parties. And it can shape the outcome in that the trier of fact will walk away, and that's the judge or the jury, whoever. The trier of fact will walk away with a better understanding of this technology. And that's a good thing, because in their next case, they'll know exactly what to look for and can kind of start to see through some of the wool, I guess, from either side. What typically happens is that one party or the other is trying to make the other one, I guess, run out of money. And so if one party hires an expert, then the other party hires an expert, and then you're going to end up with a battle of the experts, which is a really common complaint among judges, right? How do you have in traditional financial forensics, how do you have two objective experts come to completely different conclusions? The values here, the values here, they've got this many assets, they've got this many assets. How do you have that if you're both supposed to be objective? And the answer is, one of us isn't. And you have to, as the judge, you have to figure out who that is. And now with kind of the new rules around how judges should treat experts, before it was a lot of times judges would use the excuse to say, oh, I'll hear from both experts, and if one is shown to be not credible, that'll just go to the weight of their testimony. Now there's a new kind of rules around what judges are supposed to do, where they need to make more of an effort to exclude experts who are not qualified to provide testimony. And that's a good thing for the industry. It's a bad thing if that's your expert that just got disqualified, because disqualification doesn't happen at the beginning of a case. It happens years later when you're going to trial, or it can happen a little bit before that. But after a couple of years of a case dragging out, those fees are very high. You don't get that back. And when your expert's disqualified, you're just left with no expert, no testimony. You have to either go hire a new one or try to present your case on your own. And so that can be a big problem as far as the shape of the case goes. I haven't seen judges really willing to do that on the crypto side of things so much, because it is such a complex topic and they just don't have the skills to differentiate between someone who's full of it and someone who's not yet anyway. That's where your expert comes in. If your expert's going to have a hard time explaining something complex to you, like to the attorney, then you may need to find a different expert, or at least find a supplemental expert that can bridge that gap, because you don't want somebody who's highly technical, or who has no sense of humor, or who can't relate to the judge or the jury. Those things are really important. They may be as important or more important than the technical side of things. So you've got to have that technical skill set, and then you have to have people skills. And that's a rare combination, I think. But I guess, as far as shaping the outcome, it's critical when with complex assets for you to have a financial expert, either a neutral expert that's kind of working paid by both sides, or each their own expert and a neutral expert differentiating between them. But it's critical when assets are complex that both sides have their chance to explain what's going on in a cohesive manner. I think that's really important.
So you mentioned that there's a lack of supply of folks serving this aspect of the industry. What advice would you give professionals that are new to blockchain forensics and want to jump into this field? Maybe they're they do traditional forensics in this realm, but those folks that are qualified from that aspect but want to jump into the crypto blockchain side of things.
Yeah, I mean, I'm a big proponent of the skill set you need for blockchain forensics is a traditional financial forensics skill set. You need to learn the new technology, and it's exactly analogous to PayPal in the 90s, the late 90s, early 2000s. When PayPal came out, financial forensic experts had to learn what those records looked like. How do you request them? What does an account setup transaction look like? The little cents in and cents out.
Yeah.
Right? What does that look like? How do I ask for records? How do I analyze these records when I get them? It's exactly the same. And like Bitcoin is not that much younger than PayPal. It's only 10 years younger. And so to have a deep understanding of how peer-to-peer transactions work when they're payment services and to just miss the boat completely on blockchain is a problem. People know how to do PayPal. It's relatively straightforward. So it is helpful that that's the case. But they don't know how to do anything related to blockchain. You have to learn it. And you have to keep learning it because new blockchains happen, new token standards happen, right? You've got to, and if you've got something that's on the Cardano blockchain, you have to go understand the programming language that Cardano is written in so you can understand those transactions. And he didn't write the language himself, but he did revive it, right? It was a dead programming language. They brought it back, revived it. Now you have to go learn it so you can understand those transactions. Same is true for the XRP ledger. You need to understand what the details of that transaction are and how they work, and what's the software that runs on top of the XRP ledger. If it's one of those like flow through payments, which is kind of like a really big deal on the XRP ledger, you need to understand how that works. Where do you go to learn it? And how technologically advanced are you, right? I happen to have a minor in computer science, which is not much computer science, as far as that. I think I learned Fortran and Java, very early Java, but tried to learn C# and then dropped it because it was such garbage. And so it went back to C++ and Objective-C. Like you need to have, and Python's in there. You need to have at least the ability to read pseudocode. At least that ability. And if you get some familiarity with Python, that would be great. But you have to have that. You at least have to have that curiosity to figure out what this is. And I refer to that as like when I'm hiring somebody new, I kind of ask them how they interact with a computer when they were younger. Are they a button pusher or did they like follow the instruction manual? I was a button pusher. I broke our family computer so many times where one issue was my uncle had to come over to fix our computer and his reaction was I don't even understand how you got to this. How did you get this? Is the deep inner workings of the stuff. Later, when I was in college, I learned that was like the machine code, right? Or the assembly language. It is an old DOS computer, so it's relatively easy to get to. But anyway, that's the gene you need to be successful in this. And if you don't have that, maybe stick to traditional stuff, but you kind of need that traditional financial forensics also. So to go learn blockchain, you've got the traditional skill set, you've got that curiosity part in you, right? There's a few really good places to go start learning the technical side of things. One is a website, Bits on Blocks, and it does a really good job of presenting very technical information in a readable format. And so it's accessible to someone who's kind of non-technical. But you can go do a credential. The credentials are getting better. A few years ago, they were kind of garbage credentials, like pay to earn, just pay for the piece of paper to hang on your wall or whatever. Now there's a few more out there that are a little bit more rigorous, but they tend to lean towards the criminal side of things and like a money laundering investigation side of things or risk management. there's still not a good credential out there for civil financial forensics. I'm working with a guy to maybe build one, or at least get some more information out there for that, because it's different than the criminal side of things. What you're looking for is different, how you're tracing, and sometimes the valuation is even different. But really, I think the best thing that somebody could do is go build something on the blockchain, right? Go to the Build Guild and follow that little course. It's a great little course. It'll teach you everything you need to know about building things on a blockchain. Go create some NFTs and see what those look like. Look at the parameters that you can change when you create those things. That'll give you a really good understanding of, one, how complex transactions can be, but also it'll give you a good understanding of how to recognize when someone is trying to pull the wool over your eyes with their explanation. And that, that can come from a traditional interview skill set, and it can come from a deeper knowledge of the technology that you're discussing. And so I guess that's kind of a lot, right? I keep telling.
No, I think that's great. And I'm glad you brought up the experiential piece as well, because I think it's so critical in crypto tax reconciliation. I don't think you can be in this field, at least on the reconciliation side of things, without having some hands-on experience of actually trading, holding, moving, accessing these assets. I think what you're talking about is deeper, and I think it's more necessary for your type of field, when you really need to understand the underlying technical aspect of what's happening. For my field, it's less necessary for folks to build things on chain, but I think at the bare minimum, you have to have used these assets, and you don't have to mortgage your house and go all in on Bitcoin to do that. You can take $10 and go play around on Optimism or Polygon or Solana or whatever, and you can do 90% of DeFi activities with that small amount, because they have low fees. So if you're playing around with some DEXs, do some swaps on there, throw some collateral on Aave, see what borrowing against that collateral looks like. Follow the chain of events on chain to see what the block explorers tell you about what's happening. And then with your knowledge of what actually happened, because you did it yourself, you can kind of tie those pieces together. So I always, when anyone's trying to get into anything related to blockchain, I say, get your feet wet. Doesn't have to be with a lot of money. But I love that you're talking about building on chain as well, because I think for what you're talking with your field, it's more important to understand that technical aspect, which honestly is beyond me. I don't know anything about Solidity other than, it's the programming language of Ethereum. I don't know anything about, the programming language of Cardano.
That's the name of it. Couldn't think of it earlier.
Yeah. So, but I think it's incredibly important, and it can't be emphasized enough, that if you want to start operating in this space, you cannot do so without you don't have to be invested, but at least play around in the space.
Well, I mean, I think to clarify, you absolutely can. You'll just be bad at it, right? So
yeah,
be bad. I mean, that's the other way to learn, right? You could practice, and that's what I do at my firm. Is I have associates that will practice on an old case, and so they're going to make a lot of mistakes. They're going to misunderstand a lot, and then we can correct those, right? And then they've got to go through some of the training for building on the blockchain. They've got to look at really complex transactions and parse that out. And it takes a long time. It's harder for people, I feel like, that are already educated. So people with a master's degree or 2 master's degrees are much more kind of ingrained in their ways. And you've got to kind of go through this process of unlearning before they can learn. Like my most successful hirees have been people that have a high school education, which is kind of wild. Other people are starting to recognize that now, that degrees have been on the decline for a while, if we're honest. But you really ultimately need that curiosity. What does this do? What does this button? What does it look like when you're engaging in those transactions? What does it look like in the wallet software that you're using? What's the, contrast that against what somebody can see publicly. Then you'll understand why, when you're disclosing something, you can't just give over a list of addresses. You've got to give the wallet software details also. And that's really difficult for people to wrap their heads around. A lot of times I hear, I don't have to give you that because all the transactions are public. You do have to give me that, because what I'm limited to is just the addresses you say you have. You've got to prove that those are all of your addresses. And then for complex transactions, you may not be able to discern what's going on the blockchain with that. You've got to have those details from the wallet software, or at least you can discern it from the blockchain, but it's easier for the wallet holder to provide it. That's also something that comes up in matrimonial divorce a lot. Equal access isn't the same. Doesn't, just because it's public doesn't mean both parties have equal access to that data.
Well, this has been a super enlightening conversation. I really appreciate you taking the time. Do you have any final thoughts or anything you'd like to share about the field or anything else you'd like to say?
I think the end note would be, don't be afraid of it. For somebody in traditional financial forensics, this is not insurmountable. It will take some work. It does take some effort, but you can gain enough knowledge so that you can feel comfortable taking on a crypto case, and maybe be an opposing expert on the case that I'm on or something. Like, we absolutely still need it, and I think it's important for people to get out there and try to learn this stuff so that we've got more people that are qualified to do this kind of work.
That's awesome. And finally, can you direct listeners, how could they connect with you, or if they have a matrimonial case that they want you to be an expert on, how would they get in touch with you or find more information about you or your firm?
Yeah, I mean, my website has a little contact form on it. That's probably the easiest. I should probably check it more often than I do, but I think my website is ybr.solutions, and use that contact form. There's also a lot of articles on there. I put together a lot of templates for people who are engaged in litigation, and so if you're still in the DIY mode, or you're the non-propertied spouse, or you don't have enough money to hire an expert, you can still give me a call, or shoot me an email, because your attorney might still be able to use those templates. Even if you're the crypto spouse, right? If you're not ready to hire an expert, at least look at those and see what might be asked of you, and make sure you understand how to disclose it.
Well, thanks again, Dorothy, for sharing your expertise and your time with us. We really appreciate it, and we hope to work on more webinars and things like that with you in the future.
Yeah, thank you so much for having me.